and welcome you tune into Buy Now, Sell Now on ET Now. I'm Shri Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But before that, let's have a look at what the markets are up to. So Cheryl, the fresh start of the week and a fresh high on the Nifty 50.
Absolutely, Shrishti. A very good morning to you. And like we were just talking a short while ago, is the fact that now hopefully we will see record high levels on a day-to-day basis for the benchmark indices. At least, hopefully, we should see that 20,000 number on the Nifty soon. So as you can see it on your screen today, we are actually seeing gains of about 0.6%. Market slowly inching towards the day's highest point. Once again, you have a Nifty Bank, however, that's the one that's underperforming the benchmark indices. It is in the negative territory as we speak. Let's take a look at the list of gainers and losers in trade today. So you have the IT companies that is holding fort once again. If you look at the top five, top five gainers on the Nifty are coming in from the IT sector. So you have LTIMindtree, which is all set to report its earnings today. That is actually the top Nifty gainer, 3.8% uptick, followed by Wipro, 3.7% uptick coming in for Wipro. You have Infosys that's seeing gains of about 1.8%, Tech Mahindra 2%, HCL Tech 1.7%. So yes, IT sector definitely leading the way in today's trading session. But on the flip side, you have Hero MotoCorp that's seeing a weakness, and not only Hero MotoCorp, even Tata Motors is down about 0.7%. SBI Life, ONGC and Titan are the other set of losers on the Nifty as of now. Talking about the sectoral indices then, and if you look at the sectoral indices, is the IT sector that's the top gainer, is 2% uptick coming in for the IT index. You have the broader markets outperforming the benchmark indices by a margin. So you look at small cap index, that's trading higher by about 1% as we speak. Also, you have metals that is holding good gains. But on the flip side, like I said, this is the auto sector that's seeing tad bit of weakness, as well as realty is under pressure. So that's the way how the markets are looking like as of now, Shrishti. We are trying to hold on to gains. And like you said, a fresh record high once again in today's trading session.
Well, yes, so that's how the markets are panning out, with IT definitely taking the lead yet again. But with this, viewers, let's kickstart taking all your stock-related queries onto the show. And for that, before that, let me welcome on board two of our experts for today. And firstly, we'll welcome on board Kunal Bothra onto the technical side, and Ashish Maheshwari from Blue Ocean Strategic Advisors is also with us. A very good morning to both of you, and thank you so much for your time to ET Now. Let me kickstart taking all your stock-related queries, and viewers, just a quick recap. You can connect with us live on a WhatsApp number that will be flashing on the top of your screen, and you can also write to us on our Twitter as well as Facebook pages, and we'll try to take as many queries as possible. Taking the first query that I have is specifically for you, Kunal. The viewer is Vishal from Dubai, and he wants to know, is this a good time to initiate a fresh buy in L&T Finance, Praj Industries and Apar Industries at current market price? He's a long-term investor and seeking your advice.
Well, it may not be the best time for Apar Industries, but for L&T Finance, I think it's a good time to buy the stock. Even for Praj Industries, I think it's a good time to chip into this name. L&T Finance, I think, is coming back after a major consolidation as well as a correction. So for the last 2 or 3 years, the stock was going through a massive correction. It's shown signs of a good recovery in the last 2 or 3 months. Broken past about the 100 levels, now at 130 plus mark. So looks at an attractive play. Even for Praj Industries, the stock has come out of, I think, a 2-year consolidation, 2 year or 2.5 year of consolidation. So that also is very attractive. The only concern with Apar Industries is the risk reward, because after a series of, I think, if I'm not wrong, 6 or 7 straight quarters of price uptrend, the risk reward could be a bit steep entering for Apar Industries at current levels. So that's the only stock which I would avoid or advise to avoid at current levels. Maybe if the stock corrects by 10% margin, at least from current levels, that would be a good starting point.
All right, just a quick note of the flash on the bottom of your screen. You have India Mart that the board will be meeting on July 20th, and what they are saying is that the board will consider buyback proposal as well. The stock actually spiked when the news came in. Now it's a tad bit off those highest levels, but 4% uptick coming in for India Mart as we speak. Let me take this next query, and this one has come from Ratnakar Behra. He's writing to us, and he wants to know about Yes Bank. He has about 6,000 shares of Yes Bank, purchased a price of 15.8 rupees per share. His intention is for the longer term, but he's asking whether it makes sense to continue to hold on to this one. Ashish, what's your take on this particular counter? Yes Bank, 6,000 shares at a price of 15.8 rupees. No doubt he's sitting on a mild bit of profits, but Yes Bank, do you think long term makes sense?
Yes, I think in long run, if you're having at least 3 year time horizon, you can continue to remain invested and it will give you better return than yeah, putting money into yes bank fixed deposit. But it's a slow and steady because again, problem is the mammoth size of equity base that this bank is having. So on every 5, 10 paisa, there's millions of shares of buyers and sellers are there, which will keep the upside in check because every rise people are there to sell and book profit and traders are there. So if you're having 3 year time horizon, my target for the stock will be somewhere between 27 and 30. So remain invested.
Moving on to the next query then, and Kunal, this one is for you. The query is from Hemanta from West Bengal, and he's holding two counters. Firstly is eMudra, 65 shares from a price of 577 rupees. He's sitting at a loss in this one, and the other name is Wonderla Holidays, 40 shares from a price of 554 rupees. In both of these counters, wants to know the short to medium term view.
Apologies, Srishti, I don't track both of these stocks, neither Vandana as well as eMudra, so I'll skip this one.
Ashish, your take on this one? eMudra, he's at a loss. Wonderla Holiday sitting at a mild gains. So, any view on any of these counters?
Yep. In fact, both are fundamentally very strong companies. In eMudra also, we saw last quarterly numbers were quite good, and management has clearly narrated that going forward also they will continue same profitability growth. So eMudra is a good buy. As far as Wonderla Holiday is concerned, again they are expanding into big way into Hyderabad and Chennai market apart from their Tamil Nadu venture, and again very low on debt as well as we have seen continuous profitability improvement. Only thing is the stock has seen a very decent run up in last few months, so some consolidation is happening. But I'm expecting again a good set of numbers from Wonderla this quarter also. So on any decline, in fact, this stock should be added, and as you are already holding, you can continue to remain invested.
This next one is coming from Balan, and he's writing to us about Cochin Shipyard and Suntec Realty. Kunal, he's making 15% plus profit in both of these counters. He wants to know whether he should continue to stay put with it or look to book profits, look at some other avenues altogether.
See, I think for Cochin Shipyard, you can look to book out 50% profits. I would not advise booking out 100% profits because the stock is nearing a marginal breakout, a swing breakout on the chart. So maybe another 5%, 7% upside is what you can expect for Cochin Shipyard. So that would be a better range to book out profits. At least you can probably try and ride the trend as much as possible to the upside. For Suntec, it could be a bit tricky because the stock has just very recently seen a very good recovery. I think over the last 1 week or maybe 10 days the stock has seen a rally from 270, 280 levels to now 368, 370 where it's trading right now. So the spike is very recent, but the stock has been a huge underperformer. So whether it's an underperforming, a dead cat bounce for the stock price, or whether it's a near term or a major trend in the making for the stock, that will probably come to know maybe over the next couple of months if this price action sustains, if the stock breaks past about the 200-day moving average. So I'll probably advise that maybe book out for 25% profits for Suntec Realty, and assuming if the stock moves up higher from current levels, say by a margin of another 50 rupees or 60 rupees, that's where you can keep on booking out the remainder 25% profit. So keep on doing that for every 50 rupees jump for Suntec Realty.
Okay, moving on, and Ashish, coming to you for this one. This query is on Zensar Technologies, which is already up more than 100% since the start of the year. And M. Methi1 is holding 80 shares from a price of 380 rupees, sitting at a profits this time around. But after the great run up that we have seen, how the valuation stacking up, and also what's your advice going ahead?
See, Zensar is again fundamentally, if you ask me, very strong company, and the stock is already at 52-week high. And we have seen again, in spite of all odds, this stock, particularly mid cap tech stock, performing compared to peer set. And again, I'm expecting good set of numbers from Zensar in this quarter also. So my advice will be to remain invested, and my target for next 6 months is around 500 rupees in this stock. And those investors who are looking for fresh entry should start accumulate this stock at 400 levels. Good growth is possible in Zensar going forward also.
It's coming from Pramod. He's writing to us from Trichur, Kerala, and he wants to know about Kane's technology. He's already purchased this counter at the price of 1,380 rupees per share, and the other counter that he's already got, Ashish, is Avalon Technologies at a price of 380 rupees per share. He's saying for the next 2 years, makes sense to stay put with these companies or look at something else altogether.
Which was the first stock?
Kane's Technology.
Okay, this stock is not into my tracking list, but as far as Avalon is concerned, I am quite bullish on this stock. I think like in last couple of quarters also, we have seen good set of numbers from Avalon, and we have seen good run up also in this stock recently. But I'm expecting some consolidation in Avalon, and my this is into my buying list. And I'll surely like to add this stock at 650 levels in my portfolio and play for the number. So at least Avalon, you can continue to remain invested.
Remain invested in Avalon, but Kunal, Kane's Technology, what's the chart telling you about this one?
I think it's an excellent chart. Ideally, I would have, recommended to maybe stay on guard and look out for dips or consolidations as a good buying opportunity. But apparently, one of such range of consolidations actually ended for Keynes over the last entire month of June. The stock was into a 100-point trading band, 1600 to 1500 levels over the last 1 month. And just very recently, the stock has broken past about the 1600 mark and now trading at 1800 levels. So either you can start buying smaller quantity at current levels and then wait out for the stock to consolidate or correct. And every 100-point dip, you can keep on adding the stock price, or else you can wait out and then let the stock consolidate. So I think the better is you go with the former, where you start buying at current level small quantity, and at every 100-point dip for the stock price, look to add further.
Okay, moving on to the next query then. And Kunal, Rangan from Chennai wants to know your advice on any of the pharma counters. Is it advisable to hold pharma stocks in the portfolio? And if yes, then which one amongst Lupin, Sun Pharma or Cipla will you like at this point in time?
Well, first part of the question, yes, pharma stocks have to be part of your portfolio. It's not just because the pharma index also offsets the major part of the market volatility, but pharma sector overall also has its fair share of a strong participation whenever you've seen the indices going into an uptrend. So even though these being defensives, they shield the part of your portfolio in tough or volatile market times. But on the other hand, we've seen that pharma index and the pharma sector also tends to perform on a very positive manner in best phase of the market bull rally. So in that regards, I think the first part of the question is yes, you should be investing into the pharma sector. Now into the second part, whether you should be looking out for large cap names like Sun Pharma, Cipla, Lupin. I think all three of the names which you mentioned are quality, and these stocks have proven given time tested returns over the last so many years. I would probably look to suggest that add Dr. Reddy and DV Slab to your core portfolio as well, because I think these stocks are also looking attractive from the large cap pharma names. So you can maybe split small quantities amongst these five names, or else look out for maybe Sun Pharma, Dr. Reddy and DV Slab as slightly better bets.
All right, the next one that we have is coming in from KVS Money from Bangalore. He wants to know about two cement counters which he's looking to invest, and the time horizon is 1 to 2 years. Ashish?
Yeah, for 1 to 2 year time horizon, if you're having my first pick is JK Cement. In my view, this is a stock which can give you very good returns. Stock has already appreciated in last few months, but again, very good set of numbers. And again, their whatever the capex was there, this is almost over now. So JK Cement is my pick number one, and my second pick is India Cement. Again, I find a lot of value embedded in this south-based cement company, and this is slow and steady, but ultimately it will give you good returns. So both these companies you can play for a 20% annualized kind of return.
Okay, moving on to the next query then, and Kunal Jaykrishnan from Kerala wants to know at what levels can he enter Maruti for a medium-term investment?
See, current levels of 9,600 approximately is a good zone to add Maruti. Now, the stock recently managed to break past about the 10,000 levels, made a new high. But the only concern with Maruti is that it's not been able to sustain those new highs. at the 10,000 plus mark. I was actually expecting that the stock would probably not just surpass the all-time high levels of 10,000 plus, but then even sustain. But that's not happened for Maruti. So you can start nibbling at current levels, buy at current levels, but the bigger trend for Maruti could actually emerge once the stock crosses and sustains above the 10,000 level. I think we need to see that happening for Maruti. Maybe over the next couple of months, if this trend continues and assuming the results also for Maruti come out in a positive effect to the stock price, I think even that could probably play a catalyst for the stock price. So it's a good buy and dip starting from current levels. But as I said, about 10,000 plus, if the stock sustains, you should get better momentum as well as better returns on a very short span of time.
All right, that's the take coming on Maruti Suzuki, talking about auto company, but this one is bagging defense orders, and that is Ashok Leyland, 800 crore rupees worth of orders that it is bagged. So that particular counter is one stock that is in focus in today's trading session. Like I mentioned, India Mart Intermesh also is in focus because the company has informed that July 20th is when they will be meeting and they will be looking to consider the buyback proposal. And apart from all of these counters, there's one stock that is in focus in today's trading session, and that definitely has to be Route Mobile. And look at that particular stock. You had the announcement that came in, you saw the stock spike in trade, and thereon it's only fizzled down. Now the stock is down about 1.6%. There are finer details that we are picking up with regards to Route Mobile, and my colleague Somit is here to tell us exactly what those fine prints are. But in a short while from now, we will actually connect to Somit on this particular counter. And as you can see flash on the bottom of your screen, Proximus will be looking to buy promoter stake in Route Mobile at a price of around 1,626.4 rupees per share. And Route Mobile promoters in return will buy 14.5% stake in a Proximus affiliate. Also, what we're picking up is that the Route Mobile promoters will be getting about 643 million euros by selling stake to Proximus. But what are the finer details in this particular deal? Let me bring on board Somit. And Somit, Route Mobile, definitely it is the stock of the day. Please explain to us what exactly is happening in this particular stock and what is the announcement like?
Well, it's a two-part deal that is happening. Firstly, Proximus, which is a global company, will be buying around 57.6% stake of the promoter, that is the Gupta family, in Route Mobile. Now, they will be acquiring the stake at a price of around 1,626.4 rupees. Now, this price is calculated as a 10-day volume weighted average price. And given the fact that they will be acquiring this 57.6% majority stake in Route Mobile, they'll also go ahead and do an open offer for the public shareholders of around 26% stake. And that will be also at a similar price of 1,626. So nothing to lose here for the minority shareholders from this acquisition. But this does not mean that the Gupta family will be completely exiting from Route Mobile, because of the 5,900 crore that the Gupta family will get from the stake sale, they will invest close to 2,800 crore in Proximus Opal, that is a new promoter company of Route Mobile. So they are not completely exiting from Route Mobile. They will be acquiring around 14.5% stake in Proximus Opal, which will be now the new promoter company of Route Mobile going ahead. And post this deal, they also said that their annual run rate target of around 1 billion. Because of this deal, they will be able to achieve this much faster. Earlier, they were expecting this to be achieved in the next 3 to 4 years, but given that this deal is happening now, they're expecting their annual run rate of $1 billion to be achieved much sooner post this deal.
All right, thank you so much for that, Somit, for putting all of that into context. And Route Mobile, definitely the stock of the day, Shrishti, and that particular stock right now is down over 1.7%.
Well, yes, absolutely. And with this promoter change and the shift that they are making, let's see how the stock reacts going ahead. But with this fears, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of the stock-related queries. As you can see on your screen, the markets are off the day's highest point right now. But this one is coming in from Deepak, and he's writing to us all the way from San Diego. And sorry, Deepak, that you're still awake. I'll actually take your query next up. And this one, he's asking about Phenotex Chemicals, 300 shares at a price of 256 rupees per share. Ashish, he wants your guidance whether he can go ahead and accumulate some more of this counter. His time horizon is 2 years or at least 40% return, whichever comes in earlier.
No, actually, I'm not that bullish as far as chemical sector is concerned. In my view, there are a few challenges now coming. Now, this phenolics cable or Pheniotex chemical? Sorry.
Change. It is Phenotex Chemicals. You can go ahead, Ashish.
Yeah, yeah. So, chemical sector, as I was briefing, that I'm not that gung-ho about as far as short-term prospects are concerned, as well as there are various challenges coming because oversupply in domestic industry as well as demand from China is not that forthcoming. So, in my view, you can treat this stock in your trading portfolio, but in long run, in my view, you can avoid and book directly into some pharma play or end user which hold good potential. So Pheniotex, in my view, if you are getting 10% more upside from here, book gains.
Okay, moving on to the next question then. And Kunal, this question is from Monish from Bangalore, and he's currently holding Z Entertainment, 100 quantity from a price of 215 rupees. Wants to know, should he hold this particular counter as he can continue holding this for the next 1 month? So probably in the next 1 month, what are the targets that you're looking out for?
So yes, I would suggest to continue to hold on to the stock, but I would also suggest to try and increase the time horizon. So what's actually happening is that Z is going through a big turnaround on the charts. Now, for the first time in the last so many months, the stock has broken past above a pattern of lower highs and lower lows to make a new high and to reconfirm a breakout of that new high after a few days of consolidation. So that is a pattern which has not been seen for Z at least over the last 2 years of this major correction from 350 levels to I think 160, 170 the stock fell towards. So which means that this could be a sign of a major turnaround for Z. And I think in this kind of a scenario, you know the maximum returns could probably be gained if you try and increase your time horizon. Now I understand that the stock is high beta, it's going through a lot of news flow even surrounding the stock price. But charts over here are signaling that the stock has bottomed out and is in for a major uptrend over the medium to long term. So if possible, increase your time horizon from 1 year to at least 1 month to at least 1 year or 2 years plus for Z.
Next one is coming in from Sunny, and Sunny has actually put a crying emoticon right now, Kunal, and the reason being is Root Mobile. He has 115 shares of Root Mobile at a price of 1,825 rupees per share. Now, what should be the strategy with this particular counter? Because he was pretty happy in the morning when the stock actually spiked right after the news. But right now, as you can see, it is sub that 1,600 levels as well. He is stuck in this particular counter for more than a year.
Well, yeah, and I think some more time the stock would probably take to try and come back to that 1,800 mark. So, in fact, after today's price action, assuming if the stock closes, say at current terms of 1,600 or below, then I think it could probably be an indication that the stock may get into a further weakness or a time-wise correction. So, it's better if you hold on to the stock from a long-term play to get back your cost price. If not, and if you're looking to trade, for example, then maybe 1,650, 1,700 is a good level to book out profits and then look to buy back again closer to 1,500, 1,550 mark. Even if you do 2 or 3 trades in this kind of a trading range, you can at least lower your immediate cost price from that 1,800 level. So from a long-term play, you can hold on to the stock price, but from a short-term play, this is the range which you should to trade for Root Mumbai.
Okay, moving on to the next query then, but before that, just a note to all our viewers that if you call us on the WhatsApp number, we will not be able to take your call. So the only way to connect with us is through writing on through the WhatsApp number that is flashing on your screen on the chats, as well as you can also write to us on our Twitter as well as Facebook handles. We're moving on to the next query then, and Kunal, coming to you for this one. This question is from Shashank, and he says that he's holding JK Papers from a price of 480 rupees, and the stock has been continuously in the downtrend. So going ahead, do you expect any further weakness in this particular counter, or should he wait for some kind of a rebound in this particular name?
Frankly speaking, indicators are nearing oversold for JK Paper on the monthly charts. I think if I'm not wrong, this is the 6th or the 7th straight month where the stock is likely to see negative selling pressure as well as negative closing for itself. And in this last 7 odd months, the stock has corrected from 440, 450 levels to now 320 odd mark. So this the short-term charts indicate that the near-term bottom could be in place. But no, my sense and my experience tells me that such kind of stocks, they generally tend to bottom out. When the selling pressure goes, or when the stock goes into a selling climax, when there is some sort of a news flow which happens into the stock price, some events, some results, etc. And the price action looks to be more weaker on that or post event. So I think wait out for that happening on JK paper, say over the next 1 or 2 months. If you see such kind of a strong price action downside for the stock, and maybe if the stock comes back towards 260, 270 mark on the back of such kind of an event, that's the time where you should look to average, bring your cost price lower, and hold on to the stock.
All right, this next one that I have is coming in from Gurinder Singh. He's from New Delhi. He's a long-term investor. Though he's asked this query to you, Kunal, I'll rather take it to Ashish, because Ashish, he has 4,600 shares of Tata Motors at an average price of 210 rupees per share. He's asking whether he should book profits or continue to hold on to this particular counter. He is a long-term investor, is what he's reiterated. Also, he has Maruti at the price of 7,500 rupees per share. He wants to know what should he do with that one also. Should he look to book profits or continue to hold on to it? Kunal, the reason why I didn't ask you about Tata Motors, because you're ever bullish on Tata Motors. So let me take Ashish's view coming in on Tata Motors. Ashish?
Also not wrong in remaining bullish on Tata Motor perpetually. And in my view, investor can continue to remain invested in Tata Motor as well as Maruti both. One good thing is that both of these companies are reporting very good set of numbers quarter over quarter. And automobile is a sector which is under active investment radar of almost all major foreign institutional investors. So this is the reason we are continuously seeing that institutional holding is going up in both these stock quarter over quarter, and they will continue to do well. So my suggestion will be to remain invested in Maruti as well as Tata Motors. I'm expecting a price target of 715 Tata Motors in 2023.
Okay, moving on to the next query then, and Ashish, coming to you for this one, though the viewer wants a short-term target, but we don't discuss these stocks much often, so just wanted your take. Firstly is on Kaveri Seeds. He's holding the shares from a price of 525 rupees, and the other one is Penar Industries. From a price of 78 rupees, he has this name also in his portfolio. The viewer name is Shiji from Karnataka.
See, as far as Kaveri Seed is concerned, my suggestion will be to remain invested here because of this time good monsoon across the country. Again, all these seed companies will continue to do well. And there are not too many companies in this particular sector where we can benchmark. So this is a company you can safely remain invested. As far as Penar Industry is concerned, this is not into my active radar, so I'll pass that question.
Okay, this one is coming from Kabir Bedi, writing to us from Punjab. Kunal, this one is for you. He wants a view on Snowman Logistics, 1,500 shares at a price of 33 rupees per share. He bought this counter a few months ago. He has a time horizon of 3 to 6 months. What should he do?
So I think you can continue to hold on as of now. Remember, it's a high beta stock. So I've tracked the stock over the last couple of years. When the stock gets into an uptrend, it generally happens in the thick of the bull market. But then when the stock actually, or when the market gets into a corrective phase, we've seen that the stock also goes into a V-shaped correction, very sharp kind of a downtrend. So you have to be cognizant of that characteristic for Snowman Logistics. As of now, the charts are looking attractive. I would expect that this uptrend will continue for Snowman. Maybe the stock can come back towards 58 to 60 range if this uptrend continues over the near to medium term for Snowman. But then, as I said, it's better to try and book out profits into these kind of stocks. If you make a healthy return of for 50%, 60% on your investments into these kind of stocks, it's always a good return to try and book profit into.
That's the advice coming in on Snowman Logistics. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And onto the show, we have Kunal as well as Ashish to guide you better. And moving on to the next query then, and Kunal, coming to you for this one because the viewer wants a short-term view on two counters. His name is Raja Shekhar from Chennai and he's holding two names. Firstly is BEL, 150 shares from a price of 107 rupees, and the other one is Ircon International, 1000 shares from a price of 56 rupees. So what's your view in both of these names?
So both are a hold from my side. BEL, of course, I think I've been advising consistently BEL and HAL as two of the better bets from the entire defense space. These stocks have done reasonably well over the last 1.5 or 2 years for themselves. And even on the short-term charts, I think they look very attractive. BEL is perched very close towards the life highs of 127.28 mark. So looks as an attractive bet even at current levels. And the stock gives you those odd phases of correction where you can look to average or build up your or size up your quantity on the stock price. Even for Ircon, I would suggest a buy or a hold at current levels. Now, I am extremely bullish on the railway pack and many of these railway stocks like RBNL, etc. They are looking extremely charged up. These stocks have confirmed breakouts of, it started off with being a daily or a weekly chart breakout, but that has now gotten converted into a monthly and a quarterly chart breakout for these railway stocks. So bullish on the space, but then the time frame over here for Ircon has to be at least 6 months to 1 year or more.
Okay, this next one that I have is coming in from Ghosh Zada. He's writing to us from Delhi, and Kunal, specifically for you. He's saying thank you for suggesting Eicher Motors, but now he wants to know whether he can buy Adani Group of shares. He has a lot of respect for the group as a whole, and being an ex-merchant Navy guy, he's saying he knows ports are superb and they're doing very well. So he wants to advise whether he should go ahead and buy Adani Group counters.
Well, I would suggest so. Yes, you can look to buy the stocks, but then always remember that whenever you're looking to buy, it's always best to buy the formidable names from the entire pack. So I think as of now, looking at the charts, the construct of the charts for the most of the stocks from the Adani pack, I think Adani Ports, Adani Enterprise, maybe even Ambuja Cements and ECC. These are a few names which you can look to consider buying as well as holding from a long-term play. These stocks have done reasonably well. They've managed to absorb most part of the volatility for themselves, which they had shown in the month of January, February 2023. So these stocks have made a very good comeback relatively as well. So I think in that regards, these are the 3-4 names which you can keep on track as well as look to buy.
Okay, Kunal, once again coming to you because Arjun is a derivatives trader and but what he's holding right now is M&M from a buy price of 1200 rupees. He wants to know the short-term target on this one and whether at this point in time should he sell and move out of this counter or stay put.
See, it's going to be tricky because on the short-term charts, M&M looked overbought a week back. I think at closer to 15, 55, 60 approximately, the stock looked overbought. It's going through a time-wise correction as of now. No signs of a reversal on the stock price. So ideally, at current levels, my sense is that the stock would spend some time, maybe another 1 week or 2 weeks, to try and consolidate it at this 1550 mark, say plus minus 50, 60 rupees for M&M. So if that's the kind of a time frame which you're looking out for, then it's always best to try and exit and then look to buy back once either the trend resumes or once the stock corrects. So if you are in from a short-term play, my advice would be to try and book out profits, wait for dips or wait for a breakout back again. Whichever way the stock breaks out, whether it's 1600 levels on the upside or whether it's sub 1500 mark, that's a good zone where you can look to accumulate or buy back further.
All right, let me just take one last query on the show and quickly coming to you, Ashish. This one is from Sandeep. He's holding TCS at the price of 3,378 as well as HDFC Bank, 1,668 rupees per share. Strategy for the next 2 years, stay put with these or look at other counters?
Yes, so as TCS concerned, there's no doubt that you can continue to remain invested because the way fortunes are changing of IT industry, TCS as being number one company of India, they'll continue to do well. And as far as HDFC Bank is concerned, I'll slightly advise you because you are having 2 year time frame. So in my view, if you invest in RBL Bank, this has got potential to give you at least 40 to 50% upside in next 2 years compared to HDFC Bank. So my vote goes with RBL Bank, which is my pick number one in this sector.
Okay, RBL Bank is the top pick amongst the banking space. But with this, Kunal as well as Ashish would like to thank you for joining us today on ET Now and helping all our viewers with their stock-related queries. But don't you go anywhere because it's time for a short break. But we'll be right back. So stay tuned with us.
Welcome back. You're watching Buy Now Sell Now on ET Now, and it looks like it's the season of IPO's new listing, and we have another one on the block. We have Netweb Technologies. The IPO has opened for subscription today. We have Sanjay Lodha, who is the CMD of the company, joining us on the show. Very good morning to you, sir. Thank you so much for joining us on ET Now. Let's talk about the IPO, and your fresh issue is for about 206 crore rupees. If you could tell us, how do you plan to allocate these funds besides using it for the construction of the building for the SMT line?
So basically, we are the primary portion is somewhere around 206 crores. Out of that, around 35 crores is marked for capex. We are till now we have been very capex light, since basically as we need to enhance our manufacturing facilities, since we do motherboard SMT in India. Server motherboard is primarily a 18 to 22 layer board, which is different from the normal SMT which is happening in India. So we need a lot of technical expertise there, and plus basically, so we need a state-of-art manufacturing facility. So somewhere around 35 crores will go into that. We already have purchased land for that. The rest than that, basically around 20 crore, we have a small debt, around 20 crores, we will settle it. And then beyond that, the rest of the money is mostly for the working capital requirements, because basically, as you know, we have been growing at a very faster rate. And since all our customers are enterprise and government, so basically we will need more working capital so as to basically have a seamless flow and to sustain the turnover.
Hi, very good morning, Sanjay. This is Shrishti joining in. In your RHP, you have mentioned that Syrma, Keynes, as well as Dixon Tech are some of your peers. How are you comparing yourself to these companies?
Yeah, that is basically because thing is that in the RHP, it's important that you mention the PS. Actually, you really see we are a step beyond that, because basically we don't do any contract manufacturing or anything of that nature. We only manufacture for ourselves. So primarily we do more than that. Basically what the peers you mentioned, what they are doing, we do more than that. So basically we do the design of our boards, we do the design of our servers, then we do the SMT of all our products ourselves, and then basically we sell our products. We have our own software stack. So it's much more than what they do actually, but because of regulatory requirements, primarily they had asked to mention us the peers those have been mentioned there. But really speaking, we are a unique offering, and it's very difficult to find a peer for us as for us.
All right. Due to paucity of time, thank you so much, Sanjay, for joining us on the show, talking about your company. And remember, Netweb IPO is open for subscription today. But let's talk about a stock that is in focus, and that is Just Dial. We are joined by the management of Just Dial on the show to talk more on the earnings. It is Abhishek Bansal, who is the CFO of the company. Very good morning to you, Abhishek. Thank you so much for joining us on ET Now. And let's talk about your numbers. The numbers actually beat analyst estimates for second quarter and almost touched 15% margin mark as well in the quarter gone by. Will we see a margin uptick in H2 FY24 as well, as more sales hiring is being done by the company, especially for the B2B segment?
Definitely, margins are expected to continue improving sequentially in coming quarters. Our headcount largely has been flattish over last 3 quarters. The collections growth that we witnessed this quarter, about 28% year on year, and what we witnessed last year should translate into better revenues. And we have also recently taken certain cost control measures. Both these initiatives together should help us take our margins upwards closer to pre-COVID levels as we move towards the future quarters.
Hi, Abhishek. But if we see your top line, that has seen a modest growth of 6% on a sequential basis. And overall, there seems a short-term pressure on the business sentiment due to inflation and elevated interest rate. Has this pressure bottomed out, and what kind of a demand outlook is being seen for your customers, and how are the collections looking like?
So for previous couple of years, our business was impacted due to COVID. But the good part is at this point of time, we are seeing good recovery, because post-COVID, most SMEs have a realization that they need to be present on a digital advertising platform such as ours. So to that extent, our particular last year collections were up about 44% year on year, which I would call it as a recovery year. And this year also, it has started on a good note with 28% growth in first quarter collections. So far things are turning out to be reasonably healthy. And with traffic holding up pretty well, we had 171 million unique users, up about 16% year on year. So that should help aid monetization and consequently profitability in coming quarters.
Right. Abhishek, one of the main key triggers for the growth of the company is the active paid campaigns, but the growth has actually been in early single digits in the quarter gone by on a sequential basis, that is. Have the average realization crossed a pre-COVID levels of about 18,000 rupees per customer? What sort of a guidance do you have for FY24 on that particular front?
So paid campaigns did have 13.5% year-on-year growth in 1Q, and realizations were up about 17 to 18% on a year-on-year basis. And yes, they have crossed the 18,000 mark on an annual basis. So as we have maintained in the past, revenue growth is a function of both paid campaigns addition and realizations. And we strive to have optimal balance between the two. We have taken certain price hikes over the last few quarters. And so I think this particular year we'll see decent growth in both metrics, both paid campaigns as well as our ticket size.
All right, Abhishek, we leave it there. Thank you so much for joining us on the show to talk about Just Dial numbers and the way forward for your company going ahead. And that was the management of Just Dial. But with that, we're totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. So stay tuned. Markets at noon coming up next.